What's up, guys? Welcome back to my channel, 10x Baggers. I haven't made a video in a while, but some people have been tweeting at me and commenting on the videos that they were hoping that they would see a video from me again soon. So I'm gonna make one about growth stocks that I have in my portfolio right now, and I hope you find it useful, and hopefully I can continue to make videos for you guys from here on out. So let me know what you guys think after the video in the comments section. What do you think of my holdings? And be sure to follow me at 10x Baggers on Twitter, because we can communicate there, and I tweet out sometimes what I'm doing in my portfolio, what I think about some stocks or maybe the market action. So yeah, let's get into it. So let's jump into the video. Quick life update. I had my first 10 bagger. This was achieved on my investment of Home. At Home Furnishings, ticker HOME. I made a video about them back in March. I rode the stock from $1.85 all the way to $19. I used the profits to buy a new car because my old one was totaled in an accident. Not my fault. Sometimes life presents you with good timing, I guess. So that's good. So the purpose of today's video is to give you a portfolio update around what I'm holding and investing in. My strategy is fairly simple, and it's based on a concept of a barbell. On one side of the barbell, I hold high potential growth stocks that can be quite volatile. This includes contrarian investments and stocks that have opportunities to benefit greatly from certain technological trends. On the other side of the barbell includes potentially slower growth dividend stocks, in which of course dividends can be reinvested, thus having the opportunity to create sizable passive income for myself in the future. It's a simple portfolio structure, and today I just want to take you through my holdings on the growth side of the barbell. In the future, I will continue to make videos and discuss my thesis on each holding in a more in-depth manner, and of course on the dividend investing side of the barbell. And of course, if you follow me at 10x Baggers on Twitter, I will try to tweet my market moves when they happen, and any ideas I have about stocks, I'll just try to keep all my followers in the loop. Okay, so I tried to list my holdings from largest to smallest on the growth side of the barbell. On the growth side, my largest holding is Tesla. It was only marginally my largest holding before the S&P 500 inclusion run-up, but this run-up to a pre-split price of $2,500 certainly took the value of my investment to new heights. I believe in Tesla's long-term competitive advantage in the EV space, and although I acknowledge the fundamentals are not quite there right now, I will be adding on any dips, and in fact I added a small amount to my positions last week in the 340 range. Square is my next largest holding on the growth side. I believe Square has an opportunity to become a global fintech giant. They have insane opportunities for domestic and international growth, both of their business services sectors and their mobile payment processor, Cash App. They were even recently approved for banking services. My thesis is that Square will become a global fintech leader as the world moves away from cash. The Trade Desk. The third stock in my portfolio is the Trade Desk, ticker TTD. The Trade Desk will benefit greatly as the world moves away from cable TV. I don't know of one millennial who is going with a cable package that includes a home phone. Everyone I know is using connected TV services, and I expect the trend is only going to continue to penetrate the market. The Trade Desk sells software and services which facilitate a transaction between buyers and sellers of ads on connected TV, using a data-driven approach. Brands can be confident that they are reaching their demo through the use of Trade Desk software. TTD is led by a visionary founder CEO, Jeff Green, who formerly worked at Microsoft. The Trade Desk has a real opportunity to become the leader in the space they operate within. The next stock is ServiceNow, ticker NOW. Again, this cloud-based business software company is led by visionary leader Bill McDermott, who moved from German software conglomerate SAP. Now, ServiceNow is an essential tool to many large enterprises at this point, making the connection of offices around the world seamless. Now, of course, has benefited from the work-from-home movement as a result of the Rona crisis, and will continue to benefit from the trend as more and more people work from home. Although the company might see slower growth in the future, I think we will see profits skyrocket as reinvestment in growth goes down slightly and as they expand their service offerings to their enterprise customers who already have a 97% retention rate. McDermott himself said on CNBC he sees no reason why revenues can't 10x from this point. Simply put, now is going to be a powerhouse for years to come. Think about the likes of Salesforce. The next stock is Teledoc, ticker TDOC. TDOC is a multinational telemedicine company which recently announced a merger with Livongo Health. The stock faded as the market did not know how to react to the news of the merger, but I believe it solidifies their place as a major player in the growing telemedicine industry. With a market cap of under $20 billion, TDOC has room to grow with the trend of telemedicine, which according to TDOC investor relations slides is a $29 billion per year addressable market, which currently sees less than 1% penetration. What this means is that a well-run company such as Teledoc has positioned themselves for a whole hell of a lot of growth in the next decade. I expect Teledoc to continue to offer more services, further disrupting the medicine industry. The next stock is Rocket Companies, or ticker RKT. RKT is a recent fintech IPO which focuses on writing mortgages for the millennial population. RKT will take advantage of two trends which are ongoing today: low interest rates over the coming years and tech-savvy millennials who are making a life transition from renting to home buying. The first trend is because people are gravitating towards refinancing their homes at low interest rates, and the Fed has already said that they intend to keep interest rates low. RKT makes quite a bit of money by originating mortgages, which are usually then sold to another mortgage servicer. All banks do this. Rocket Companies recently had a blowout quarter showing unheard of results, like doubling revenue like crazy. I'll put it in the video. However, as with any equity, we never know exactly what a stock will do, regardless of how the earnings report goes, and in the wake of the fantastic quarter, the stock actually went down. This presents an amazing buying opportunity for our RKT in the long term, in my opinion. The last stock in my growth portfolio is a bit of a contrarian investment. It's Tellurian Investments, ticker TELL. The stock has been a weak performer for me, and I am currently down on my cost basis. This stock relies on a binary event, but I believe it offers a fantastic risk reward here at these prices. The stock has plans to facilitate the creation of a natural gas terminal which will export to the rest of the world from America. It is looking to sign a long-term deal with a foreign nation which will supply the nation with more favorable gas prices in return for locked-in long-term income. The leaders of the company are some of the best in the industry and have a proven track record for success in leading a natural gas company. This is the main reason why I invested in TEL. It's because the founder, Sharif Suki, led Cheniere Energy through a phase of explosive growth, which was like $1 a share to now all the way up to like $80 a share, and now it's around $50 a share. And the only reason Suki left Cheniere Energy was due to disagreements between him and a large shareholder, Carl Icahn. I expect leadership to navigate the company through this tough period and create another American natural gas powerhouse. The company on Twitter estimates that the fair value of the share price is between $14 and $19, which is quite a nice increase from the current price of around 80 cents per share. Two upcoming catalysts which could cause the stock price to rise in the short term are rising natural gas prices into the winter or completing the Petronet deal, which will make India a partner in their pipeline project in return for favorable gas prices. Alright guys, that's my video about my growth holdings. I hope you found it useful. If you want to discuss stocks, feel free to follow me on Twitter at 10xbaggers or comment down below. I'd love to hear your thoughts on my holdings in the video or any other growth stocks you're looking at right now. Until next time, all the best and happy bagging, folks.